especially here, we've seen something interesting recently where even as the price continues to go down, open interest actually coming back up. Is that a sign the bottom is in? Is there anything we can ascertain from what's out there yet, or what are you seeing in terms of that so far? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And welcome on into the show today. As you can see, I'm joined by one of the silver legends of the industry, Craig Hemke of TF Metals, who's really been following a lot of the silver data on a day-to-day basis. Craig, you're probably the chief on that one. And today, it'll be exciting to get your opinion of whether we've seen the bottom. Is it in yet? Some interesting things happening. So, Craig, welcome on in. Great to see you again. And how are you doing today?
Nice to see you, my friend. I'm just laughing to myself. Your generous introduction of a silver legend. I am getting older. So it is what it is. Eric Sprott told me about a year ago. He said, "That's your turn. I'm retired. It's your turn to run." And I'm like, dude, I am ready to retire. What are you talking about? So I'm going to hand that off to you now, Chris. You get to be the young guy. But
well,
anyway.
It's interesting. Back when I was on my options post on the New York Stock Exchange, and I was, seeing the money printing, studying Austrian economics, seeing a lot of what would eventually happen in terms of the Federal Reserve's, hand in all of this. It was you and Sprott and King World News, and there really wasn't anybody else covering it. So, hats off to you. Blazing the path for a lot of us. And which is why I think people are excited to hear what you would say, especially, in terms of we've seen a pretty vicious sell-off in silver.
Yeah.
I think you mentioned we had 16 days down in a row. And then especially here, we've seen something interesting recently where even as the price continues to go down, open interest actually coming back up. I know you commented on that on your show on Friday. And is that a sign the bottom is in? Is there anything we can ascertain from what's out there yet, or what are you seeing in terms of that so far?
Well, in general, when open interest is rising as price is falling, that's a pretty good sign that the hedge funds are getting short. And if you look at it from the bigger picture, as long as I've done this and tracked this, the banks win and the hedge funds lose. Okay, so as price is going up, oftentimes hedge funds are looking for long exposure and the banks gleefully sell it to them. And then when momentum eventually wanes, and how many hedge funds are there in the world that buy silver futures? There's not that many. Okay. So eventually they're all long in position, and all of a sudden momentum runs out and the price tips over, and then banks help give it a shove. And then those same speculators and hedge funds that were buying silver futures all of a sudden start selling, start getting stopped out, technical factors start working against them. And the banks start covering and buying back all those shorts. And it's just this cycle, the Andy McGuire used to, like a shampoo bottle, the wash and then you rinse and then you repeat and then you wash and you rinse and then repeat. So anyway, so back to your question. If open interest is rising while price is falling, it generally means that the large speculators in silver, the hedge funds, are getting short. And in fact, you can actually see that in last week's COT report. I've got it right over my here. I'm just going to grab it. I keep all these hard copies just so I never lose it. The large speculator category in silver, which is mainly hedge funds, added 12,051 new gross shorts. So they went from 28,000 to 40,000. So what's that? That's almost a 50% increase. Okay. So that's a pretty clear sign of, bearish sentiment on the speculator side. And then, of course, the banks are just taking the other side. They're taking the long side, the opposite trade when the speculators getting short. And so it's just kind of an ebb and flow until the system finally changes. If the speculators get overly long, price is going to start getting a little heavy. That happened about 6 weeks ago by my measurements. And now we're back to the point where the speculators are not quite flat yet, but pretty close. what are on the CFTC reports, they call them the swap dealing banks. What are swaps, right? They're derivatives, options, futures. Who deals the derivatives? The banks, the bullion banks. So when you see the swap dealers on the CFTC reports, they're talking about the bank positioning. And after being about 20,000 contracts short a month ago, they're now net long. So there are a number of things that combine that we're probably very close to a low. And actually, silver has responded pretty well the last couple of days. And one thing I'd add, Chris, when all this tipped over about a month ago, and it was, God, it was just a month ago, the Monday after Easter, that silver was pushing toward 27 and gold was briefly over 2,000 and everybody was all excited. That was 4 weeks ago, like today. It was just that long ago that things looked pretty good, right? And everybody was long and excited. And then you see what happened next. Well, what happened on the way down is silver broke down first. Silver broke down through its 50-day moving average while gold and the shares were still above theirs. And it was going to either silver had to return around or gold and the shares were going to follow it down. They did. And then silver took out its 200-day and gold and the shares then eventually followed along a couple of days later. Well, anyway, silver started to look better. Back on Friday, gold was down $20 or something on Friday, but silver was up. Gold's back up $5 or $6. We record this here on Monday and silver's up 50 some odd cents. So we'll see. Maybe that's now a trend in the right direction. And just as you can follow the ebbs and flows and know that, okay, it looks like the speculators are kind of going to run out of buying momentum and price is going to tip over, you can also see where the speculator is going to run out of selling momentum too, and price comes back. I mean, it's kind of how this all rolls and how it has always rolled for as long as I followed it.
Yeah, that does seem to be the case. And we'll come back to that fascinating month that we've witnessed in the pricing and some of the events that led prices to spike initially. Although, as you pointed out there, here's a chart I like looking at, and you see this red line here, that's the commercials. So you can see them getting closer to even. So as long as they get here on the bottom one, you see the swap dealers, the green line. So suggesting that the banks have been covering a lot of these short positions, which again, while there's no guarantee of such a thing, has, at least according to the past history, often been when we see the price turn around, whether that's, some sort of ever reaching the wall of 30 yet, at least could be a sign that we're somewhat close to that turnaround.
Yeah. And, you think back, you mentioned the 16 days in a row. It got to 17 out of 18, and now we've been up 2 days in a row. 3 days out of 4, Chris. Wow. But anyway, there was one previous time that I can ever remember that being that bad in the last 12 years. It was this time of the year in 2017. And silver actually went down 18 days in a row, 18 red candles in a row. Now, I mean, it was like you and me and a handful of other masochists that were actually still paying attention in 2017 because we'd been wandering in the wilderness for 5 or 6 years at that point. And price was already so low. I think it went from 1950 to 16, maybe over the course of those 18 days, but it went down 18 days in a row. And the daily momentum indicator, the relative strength index, got to an extremely oversold level of 18. And we always used to joke on my site that if your losing streak matches your RSI, it's probably a good time to buy. So late last week, I think the RSI bottomed at like 20. I mean, it just get to a point. I mean, it's not a whole lot more complicated than you get to a point where you've either got more sellers than buyers or more buyers than sellers. And that's probably where we got to last week. We'll see. You mentioned getting above 30, anybody can look at a weekly chart and the consolidation that silver's been in for almost 2 years now between 22 and 28. We've tried a couple times to break up above 28, looked like kind of a false breakout. We've tried a couple times to break down below 22 and looked like a false breakdown. Let's watch silver, as I said, for how the shares and gold might be doing. But let's watch silver this week in particular to see if it can get back above 22 on a closing basis on Friday, because then you'll have this kind of maybe a false breakdown. So anyway, there's a lot going on. It's certainly time to be watching it closely.
Yeah, and as you mentioned, we're recording Monday afternoon, where one of the rare times it feels like you actually see silver rallying. And you talked earlier about how it wasn't too long ago that I think it was a Tuesday where we saw gold. I believe it got as high as 2077, depending on where you're marking it.
Well, that was in March.
Yeah, and really
Yeah.
in that time since then, again, getting close again about a month ago, we think about the factors that led to this. All right, you've had massive inflation reports, massive money printing, escalation of conflict in Ukraine, which doesn't seem like it's gotten better in any conceivable way since then. And then the price gets hammered down. Now, I can understand some people are saying, all right, well, the Fed's finally raising interest rates, although let's keep that in check there because still no decrease in the balance sheet.
Right.
Here we are pre-Lehman, first 95 years of the Fed, you get to 800, almost 900 billion. Now we're at 9 trillion. So in the past decade plus, you've seen a 10x of the Fed's balance sheet. So what would you say is really is it again just the the paper games and increasing open interest and selling the heck out of this thing, or is there any correlation to what you see happening fundamentally?
It's not a function of fundamentals at this point. I mean, remember the old adage from Ned Naylor Leyland, about the futures tail wags the spot dog, right? And the futures price really doesn't have that much to do with the fundamentals of physical supply and demand and all that kind of stuff, at least not on a daily basis. Okay. So what really drives price is the supply and the demand of those derivatives, the futures contracts. And so, all right, well, let's think about that. I was talking about the hedge funds and the speculators and the trading funds and that kind of stuff that make up that category on all those CFTC reports. Well, what do? They buy these futures. Well, is there somebody like you and me, that's like, wow, that looks pretty good. I like the chart. And I just saw some reports about gold demand out of India. I better buy 100 contracts, 100 GCs. No, I mean, 90% of all trading volume, it doesn't matter even what you're talking about anymore, is high frequency trading machines, pre-programmed algos that take their trading. These machines are they're supposed to be watching, like for gold specifically, they watch the bond market, they watch the dollar. They got all these other cues that then make the algo decide whether to buy or sell their gold contracts or their silver contracts on a daily basis. I mean, we've watched the dollar has gone from 90 to 105 in the last year, but it's particularly been brutal in the last month, been almost going straight up. Well, why is the dollar going straight up? Well, then you can start talking about inflation and the Fed hiking rates and how the euro, the ECB is not going to be hiking rates, and the Bank of Japan is trapped and they can't hike rates. So all of a sudden the dollar looks pretty good versus the euro and the yen. I mean, it has its own set of fundamentals, but the dollar going up causes these machines to sell their silver futures. Doesn't have anything to do with that wall of silver behind you. It's just the machines just doing their thing. So between the dollar rising and rates rising, the bond market selling off has given this impression, I guess, kind of bigger picture that real interest rates are rising and are going to sustainably keep rising. And therefore, again, machines or a few handful of individuals actually do sell. And that's where you get these prices falling like this. We'll be curious now, Chris, and there's history and precedent to this. In the fourth quarter of 2018 is probably the period that's most analogous to where we are today, because the Fed had tried to run off some balance sheet and had let rates rise. 10-year got to 3.25%. And the forecast for 19 was like 5 or 6 rate hikes. And, Goldman Sachs was talking about 5% on the 10-year and all this kind of stuff. The stock market broke. It fell 10% in October and November. And then it took out what had been those lows in early December and fell another 10%. And that led ultimately to what now people call the Powell pivot. Well, when it started taking out that final 10%, gold didn't go down. Gold went up 3 or 4%. As it kind of caught a safe haven bid, but then the bond market was rallying on a safe haven bid as well, and the machines started buying gold. So we're probably in that, that's going to start impact things going up too. But main thing people need to realize, and I know you repeat this, you do a great job of educating folks, is that the physical supply and the demand. I mean, all of us silver warriors and Wall Street silver and everybody that's buying silver, that's wonderful. But you can clearly see the impact it's had on price, right? Because again, day to day, that doesn't matter that much. Long term, yes. But day to day, it's the machines selling the futures contracts or buying the futures contracts that determine price.
Yeah, which makes a lot of sense. Actually leads perfectly into a question I saw earlier today that would be great to get your opinion on, because we had someone, I guess he was not fond of Keith Neumeyer saying triple digit silver. Although I wonder if the scenario, whether it's triple digit silver or just breaking above 30 or reaching, the 1980 high of 50,
Yeah.
if it's a matter of, okay, at this lower price where there's not much interest in silver and there's not a lot of people out there buying silver because they've gotten pounded on it for the last decade, that, it's tight, but there's some supply out there. So you've been able to keep it in check. Yet what I would suggest Ross Benham of the CFTC was so concerned about last February, when he was avoiding much worse outcome by his market structure that tamps down the price, is that, you saw for a morning, you had it on CNBC.
Yeah.
And perhaps, the Silver Institute saying we're already in a deficit. So if you really have a lot of buying in the public, could that be what answers this question, where he says if silver demand is so high and supply so low that silver should be triple digits, industrials would be knocking on First Majestic and other miners' door and actually be outbidding each other at the door? I think there's a degree to which some companies have started asking, but my guess is that the guy running Apple that makes that decision, I don't know if they're aware, if people are aware of just how this stuff is being priced.
Right.
But is it really essentially when the public comes in and there's even increased physical demand, perhaps as stock and bond markets are further collapsing as rates go higher, that it'll take something like that to trigger something similar to what we saw in nickel?
Yeah. Well, and that's the thing. I've known Keith for years and I think the world of him. But I don't know what this kind of gets to, like what I get asked all the time about gold. What's the actual price? What should the price be? If we got to we got away from this digital derivative fractional reserve shit, excuse me, my French, and got to an actual kind of physically discovered price instead, what would it be? Well, I have no idea, because you don't really know how many ounces there are backing the system in the first place. And so, $100 an ounce, $200 an ounce, whatever. I don't know. I really don't know. I know it's not 20, probably isn't the right price. Maybe the easiest math in terms of how to figure out physical demand versus price. Think of, I think the annual industrial demand for silver is about 600 million ounces a year, right? So that's always pretty constant. Now, mine supply, and I don't know if we should count Chinese and Russian mine supply, but if we do, it's about 850 million ounces a year. And then if you want to just keep the math easy, think of recycling, and that kind of stuff at 150 million ounces a year. So you've got an annual supply between the two of, I mean, again, these numbers aren't necessarily accurate. I guess you got it right there. You got what, 1 billion ounces,
Covered.
Right? Okay. So if an industry is going to chew up and consume 600 million, it leaves about 400 million for investment demand. So on years like last year, or maybe this year will be the same, you exceed 400 million, then you actually do have a supply deficit. Now, some will say, well, yeah, but when price goes up, you're going to recycle more because people are bringing in grandma's candlesticks. And so, well, price is going to have to go a lot higher than 30 for people to bring in grandma's candlesticks. Okay. And our hope is for everybody that still holds their silver, that's been buying silver relentlessly for 10 years or whatever, is that you reach a point where the system breaks, because the pricing scheme relies on confidence. No different from your local bank. Okay. You go deposit your $1,000, or make it a bigger number, $100,000 in your local bank, and then they're going to loan it out. And so if you show up a week later and want your $100,000 back, they may only have 10,000 in the vault. right? And if you have enough people that show up at that same moment wanting their $100,000 out, the bank's got a problem. And that's how you had bank runs back, in the 30s, or you see it even today. Well, the same thing is true about this global pricing scheme. The bullion banks flow metal around at this falsely, fraudulently determined price. And as long as they can flow some metal in at that price that they discover through the trading of their unallocated contracts, in London and in the futures in New York, then it has this air of legitimacy. Everybody has confidence in, I guess it really is $22 because I was able to get some. If they run out of metal, if you get this crisis of confidence, then that leads to, wait a second, you told me I could get my metal at a certain price and you don't have it, or, they're unable to fill orders, then the thing can unravel real quick. And then we'll get a chance to find out if Keith is right. If $100 is the right price. But for now, confidence is maintained in the system, and that's why it perpetuates. But at the end of the day, I feel pretty comfortable that your risk reward ratio is skewed toward reward at $20 or $21 an ounce. That's for sure.
Yeah, I'd say so. Especially, really the closest we got to seeing any sort of physical backing since it was removed from the coinage when they were spending too much money in Vietnam was when the Hunt brothers tried to take delivery and they had to outlaw buying.
Yeah.
And that's like, I don't know. It's kind of like anywhere until we correct that little anomaly in history, we're guessing. But as you point out, here's Silver Institute. They show after the, assuming metal actually goes into SLV, they're 2019, 63 million ounce deficit, 2020, 258 million ounce deficit, 2021, a negative 100. They're expecting another deficit this year. Perhaps for good reason, because you see here, look at their press releases. Global silver demand surged in 2021. Global silver demand forecast to reach a new record in 2022.
Yeah.
They're giving you some clues.
Yeah, right. No, and again, look, let me put it this different way, maybe. We all have alternatives, what we can do with our fiat dollars, right? And a lot of central banks are buying gold. Okay, so they're kind of voting with their feet. But even me, I sit there and let's say I've got 10,000 extra dollars sitting in a checking account. I could let it sit in a checking account, I suppose, and watch that just get eaten away by inflation. You got to put it someplace, and I don't want to keep it in dollars. And so one of my alternatives is like, well, okay, if I can buy another 500 ounces of silver at 20, it might go to 18, but I think there's a much better chance it's going, to 25 or 30 or whatever. And I think that's the choice that all of us as consumers and individuals need to make. And eventually, like I said, we get enough people to understand this. And I just can't commend you enough in the job you do with your channel and everything else, in just educating people how this fraudulent system works. And because the more people we get involved, the more people we get stacking silver, the more silver we can take out of the hands of these banks, the closer we are to getting some kind of resolution, some failure in their system. And that's what we're waiting for.
Yeah, well, as you pointed out last week in your column, you had this tweet from SRS Rocco showing that, maybe silver goes to 18 or lower, but here Endeavor Silver that I did see as well, all-in sustaining cost, $20.90, nearly $21. Also, we had First Majestic, who I might add is bringing everybody today's episode of the show. So I personally thank Keith for standing up and to the things that have been going on. And I know some people disagree with where he sees the future, yet again, similar 2087 silver equivalent, all-in sustaining costs. So there's also a bit of a floor. Now, to be clear, a lot of the silver coming from the non-primary silver miners. Although, Craig, I am creating a shareholder petition where people can sign if they want companies, even the non-primary ones, to stop selling their thing basically at cost of production. So again, though, there's some reason of supply and demand to which you would think we can't drop much farther below.
Right. Chris, we saw that back 6-7 years ago. Remember when we were in that sojourn in the desert and price would go down to about 14, 1450, and they could never take it any lower than that. And we could discern that there was kind of a physical floor then. It's not like you get $1 below your all-in sustaining costs and you put your minds on, care and maintenance. But there is a point at which you're like, why are we losing $2 an ounce on there? I mean, this does not make practical business sense. And then the whole exploration starts to slow down. And so, there is a point that it gets to be where price is so low that then the supply starts to contract, and that supply demand thing finally actually starts to help us. Putting that in today's terms, I'm glad you mentioned that tweet from Steve St. Angelo, because it's right. I mean, is the floor now 20, 21 near here? Probably. This notion that it's like some of these people on Twitter saying that gold's going to go to $900. How is that going to happen? Because at some point you have to have physical metal at that price. Otherwise, it's this bifurcated market that blows the lid off of all of any legitimacy it might have. It's like 2 years ago when COVID was kicking in and the futures market had silver at 12, but you couldn't buy it anywhere less than 22 or 24. So what's the actual price, right? So it has to, to keep the system going, the banks have to kind of let it come back up and get into this kind of median area, meet in the middle. And so the same thing would happen here. These people saying, gold's going to go to 1,000. Well, yeah, but if you can't buy it for less than 16 or 1,700 or whatever, then what's the actual price? And that would be the same thing again with silver. So yeah, we got down to $20.50 as recently as last night. I just think that's probably, we could go lower, but 10% lower versus 50% higher in the next 6 months or whatever. I mean, that's a pretty good risk reward skew.
Well, I think so. That's why I left Wall Street. Although, again, I think it's context dependent to some degree. And as you point out here, another thing that doesn't seem to be getting as much coverage, I've rarely seen such a strong warning about shortages of refined oil products. Now, I know Joe Biden is out there. One day he's going to release strategic reserves. I mean, it's quite a handful of things this guy is promising. I mean, he's an arms dealer to Ukraine, where it seems out of the title. And Craig, I know I told you I was going to get you a little riled up on today's call because just to end this, let's take a look at who's actually making these decisions. This popped up when I pulled up the gold chart.
Very seriously.
Let me rewind here. So it's kind of like a Three Stooges montage between government officials. You get some Mohammed El-Arian and even some Fed bankers. So it's about a minute long. And if you can, we'll get your thoughts after this.
I'm taking inflation very seriously, and it's my top domestic priority. There are things we can do. That starts with the Federal Reserve.
I worry that the Federal Reserve has tried to be too nice to markets.
75 basis point in an increase is not something the committee is actively considering.
You cannot come on TV and speak about all the uncertainties and then rule out a certain policy response, 75 basis points.
50 basis points, is already a pretty aggressive move. I don't think we need to be moving even more aggressive.
It is absolutely essential that the Fed regain credibility.
We don't rule out 75 forever.
It will not do so until it does what the ECB did.
Inflation has increased significantly.
Of course, we need Christine Lagarde's opinion
over the coming months.
I must commend the Bank of England.
UK GDP growth is expected to slow sharply. Monetary policy, therefore, must navigate a narrow path.
I wish other central bankers were as honest and as balanced as Andrew Bailey was.
Me too, Craig. Although I guess if people had just read your column about 10 years ago, they could have saved, because as you point out, just about every day, it's good cop, bad cop. In the end, the trends that they were going to keep printing money, they'd have trouble ever undoing it, has stayed the same.
Right. Well, I'll just add these couple of things. I mean, I know this has sucked. This last month has just been brutal. Do you know that today, Monday, we're up $6? The last 3 Mondays we were down like 36, 48, and 24. So we lost last 3 Mondays. We've lost $100 just on Monday alone. I mean, it's just been, you start the week terrible and you just feel like, we're just doomed. Look, this is not going to last. Okay. The Fed, you mentioned the petroleum and the distillates. Okay. Crude is back up to like 114, right? This is not the diesel fuel, the jet fuel, and the gasoline problem is a refinery issue. We don't have the refinery capacity to make them all at the same time. Okay. So all of these prices are going through the roof. What they're talking about rationing diesel fuel this summer on the East Coast. Well, then the trucks are going to stop going, right? Then you're not going to have food in your grocery store every day that you're, I mean, this is a multi-pronged problem that 50 basis points, 75 basis points ain't going to fix. Then you throw in the grains. You see wheat today is back up to $13 a bushel, and India is not going to be exporting wheat. Corn's over $8, soybeans are $16, and those go in everything. Okay, so Mohammed El-Arian can sit there and smack his lips talking about Fed credibility and 75 basis, but it doesn't mean jack. Okay, if they do that, they're going to crash the stock market again like they did in 18, and then they're just going to have to then they're going to pivot, and they are never, ever, 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 ever in a million years going to get Fed funds up near the rate of inflation. Ever. Not going to happen. So when this eventually happens, and the Fed is revealed for being charlatans and liars, and that curtain gets pulled back, and people that don't normally pay attention to gold and silver and the mining shares suddenly pay attention, whether that's 2010, 2016, 2019 and 20, or in the couple of weeks or months ahead, that's when the precious metals surge, because all of a sudden people start paying attention to them, and you get some flow of funds, in the trillions and trillions and trillions of dollars in the global markets. Some of it diverts off into the metals. So look, this last 4 weeks has been brutal. I've hated every single second of it. I find myself staring off in the middle distance all the time. My wife looks at me and says, "You okay?" And I'm like, "What?" But this is going to end. I mean, it's going to end. It's going to end soon. And so I just keep getting back to that. You can break the system if you get the metal out of their hands, but even in this short term, you will profit by adding to your stash, getting out of dollars at these prices. I just have full confidence in that. And as we go later in the year, that's all going to work out that way, because again, the Fed will be forced to pivot before they ever turn real interest rates positive. They'll never get Fed funds up above inflation, ever, period, never.
It's hard to see any way that could happen, although as things transition between here and there. Craig, could you let folks know about your site where you have some great daily recaps and keep people posted on this every day?
Well, if you think I ramble a lot during interviews, you should hear me do a podcast on my site. And maybe that's my problem. I do these in the afternoon. This is my time of day that I talk for 20 minutes at a time. If you scroll down, that's my morning post today. I do a post every morning. If you scroll down, I do a podcast every afternoon. And so I the main thing, I try to keep track of the big picture, so everybody stays engaged, don't get emotional. The math is the math. Let's keep preparing for where this is heading. But at the same time, the site itself has become a community of at least economically like-minded people from all around the world, all different political stripes, everything else, but we all recognize we're in the same boat. And so I think people get a lot of value from the site just by being a part of it. So anyway, it's right there, 12 years now, TF Metals Report. You'd mentioned maybe we should have a coupon code. We've done that before. If you want to join and if you want to kick the tires, this would certainly be a good time to do it. You go to TF Metals Report, you find the subscribe button. You go there, there's a little video talking about how great the site is. Of course, I'm biased as the host of that video. Anyway, you click a monthly sign up. It's $15 a month. You go to checkout and you use the coupon code. We decided CFTC.
For my man, Rusty. Hopefully he'll be signing up today. I think he could learn a thing or two if he was visiting your site more often.
Maybe he would, wouldn't it be fun if he already was? There are people on my site that I know who they are, but nobody else does. That always gets me. I always get a kick out of it when I see them interacting with other people. But anyway, I don't think Ross Benham's on there. But if you go there, you sign up, pick a monthly subscription. You enter the coupon code CFTC. It'll cost you $7.50 for a month, and then you can quit, or you can start paying $15 a month after that. It's up to you. But man, I look at that chart. That's a great. You want to talk about a reversal day? They washed us out to 1785 at about 2 a.m. Eastern at 7 o'clock. I went about the London Open this morning, 1785. And now look, we're back $50 higher. That's at least a short term, maybe intermediate low. Probably we may come back down and get close to that level again. And then double bottom, we'll see. But boy, you see a chart like that, that makes you think maybe the lows are in. So join us at TFMR. We have a lot of fun there, and I think I can help you save some money.
Yeah, and I think, like you said, just having a network of other people. So when you see this, what's become a regular V-neck chart pattern here in the last couple months, again, there's the frustrating part. But even aside from silver, I find the community of people.
Right.
Just finding others who are seeing the same thing, and just other areas of life where you can help mitigate the effects of Rostia and the regime. I love this headline: CFTC won't hesitate to change the rules if needed. Ross, we already knew, but thank you. Thank you, Craig, for putting the site up, giving people a home to the metals, and we'll look forward to catching up and doing this again soon.
Hey, and I should mention, you had my site pulled up there. Chris Marcus has been a member forever. So you never know. You might interact with Chris Marcus while you're on there.
Well, I do pop in there. I don't always get to comment, but I go through the column. It's great just having the column in the podcast every day. So, for me, I put things on double speed, but if I have to travel, I can easily get caught up.
Right.
And
and you're busy. Everybody on my site is busy. And my job is to sit there and watch this crap all day. Right. And say, hey, did you notice what's happened? Did you notice that jet fuel prices are through the roof? And then if your wife is like my wife, and she was on today on Southwest trying to buy a plane ticket a month from now, and went, holy shit, $900? It used to be $300. Well, you get
price hike, Craig. You got to watch out for that.
Your 50 basis points ain't going to help with that. Powell's flying private anyway. But the point is, I can keep track of all this stuff for you. And you can just scroll through there really quick, and maybe you might catch something that you might have missed. But anyway, I'm rambling. I got to go record a podcast.
Well, you also nailed it earlier this year, and I've thought for a while, I think their means of keeping inflation in check is to destroy demand, because everything's going to be so expensive, or then they're going to crash the economy with their rate hikes.
Right.
So appreciate you keeping us posted there. And if I hadn't already been a member, that CFTC password would have hooked me in. So we'll look forward to checking in again soon, Craig.
All right, my friend. I'm not just trying to butter you up, because you got such a great business. But all you've done over the years, writing your book, all the interviews you put out, you are a warrior, man. And all of us are in your debt for all that you do for the community. So keep going. All right. Appreciate it.
Well, that sure is kind of you to say. Thank you. And we'll be leading the charge together.
Okay. You got it.
Well, thank you, Craig. And thank you for everyone who's watching at home. Hope you enjoyed that one. Also, again, a quick note. Thank you to First Majestic Silver for bringing us this call. In case you missed it, they did have their earnings out a couple days ago. The link to read the details is in the description field below. And to find out a little bit more about First Majestic, well, here's a video with Keith Neumeyer, First Majestic CEO, coming your way now.